right, everybody. Happy Thursday. How's it going out there? Hope you're having a good day here so far. Got a busy one out there today. This is our quick stock market update show where we go over the good, the bad, and the ugly in the stock market throughout the day. We also have our class later tonight. I've already got the wine ready to go. See? I loaded it up. Old Milton Park's my favorite. We call it Wine and Wealth. It's just a class we do for customers every Thursday where we go over something interesting, usually something basic or advanced or some sort of market update or portfolio update. This one's going to be kind of geeky. Need you to hang in there with me. This one won't be for everybody. We're going to go over the market stats before, during recessions, not only leading up to a recession, during recessions, all the great data involved inside of that so that, in case we happen to lean that way, you'll know the data and everything. So if you're one of our customers, feel free to join us tonight in the dojo at 8 o'clock. Always at 8 o'clock. You can take a look here. If you want to see, it'll be this class right here. We got little Dustin Geeky Guy as the icon because this one's going to be pretty deep. Short. We always keep these classes short. But when you go into the dojo, you'll actually just see this entire area up at the top turn into me. Might be a live stream in there. So hope to see you there later if you want to come by and you're one of our customers. All right, let's go over the stock. Oh, you want to play the game? Guess the Dow. jazzwealth.com/guess the Dow if you want to play. $100 gift card. I think you guys know how that works. And your jazz song of the day, Stan Getz, The Girl from Ipanema, right? You feel it? I feel like that's the song they should put in the background of where Elon Musk was dancing in China with his jacket. That song, he seemed to be like right on pace with that song. I don't know. I just thought that was interesting. Anyways, Dow lower by 127, 5 on the S&P, and minus 13 on the old NASDAQ there. Let's go over to the charts and take a look. S&P 500 started the day lower. Actually, everything started the day lower. The markets had a bad taste in their mouth. Actually, overnight, markets sold off pretty sharply and managed to recover by the open. If we look at the futures here, this is the S&P futures. You see that large tail down there? I'll zoom in so you can see it. That's basically your overnight performance, at least the bottom part of that tail. There was news out of China that they updated the number of coronavirus cases, and I think they added like 15 or 18,000 or something to it. And so the markets initially sold off. Then we got more data from them to find out, oh, that was just in the Hubei province there. That wasn't actually China as a whole. If you take the data from China minus where everything initiated there, those cases are going down. If you take the rest of the world, those cases are going down as well. So the markets basically found a reason to buy that dip. I don't think it was that big of a deal, but nonetheless, people didn't really believe China's numbers, and they came clean, or at least they tried to come clean there. So you got the S&P at least lower to start the day. It did go positive right after lunch. So did the NASDAQ. The Dow never made it there. On the day, the Russell 2000 was your best performing index, outpacing the S&P. Actually, I believe everything outpaced the S&P today. No, the Russell 2000 outperformed the S&P today. NASDAQ is right here. There you go. Still sitting pretty much at highs. Actually, 20 of the last 30 days, the NASDAQ has been higher. Got a few of those stats for you, so we'll see what we can share with you. And like I said, it did go positive after lunch, but ultimately finishing the day down just a little bit. After lunch, the Fed came out, New York Fed came out with their the new update on the repo schedule there, and so the markets took a just tiny little bit of a hit there, but that helped us close in the negative for the day. And if you look at the S&P 500, even at the lows of the overnight session where we sold off, we had only given back about 0.6% of what year to date was pushing a 5% gain. So it wasn't like it was a huge pullback, just a little bit of overnight volatility there. And that's what you have. If you look at some of the FANG stocks out there, they were mixed today. Facebook was higher on the day, 1.3%. Netflix, I believe, was the other one that was higher on the day. Yeah, small gain, continuing to be strong there, hitting back to new highs. But your Apple, Amazon, and Google all finished the day down lower. You can go through them, take a look if you're interested. Amazon a little extended in the short term, so kind of understandable there. In the Dow, by the way, Walmart was your better performing stock, moving out of this range. Back to the 50-day moving average, maybe trying to get just a little bit of a push ahead of their earnings. The earnings come out on the 18th for Walmart, so it's nice to see it wake up just a little bit there. I know some of you have been holding that at this 200-day and kind of hoping for that to get going, so not a bad day for Walmart. Procter & Gamble was one of the other better performers as well in the Dow, up 1.2%. Notice anything there? A little defensive play there. We're going to talk about that a little bit. Everybody is still getting defensive out there. You see these defensive areas doing really well. Cisco was lower in the Dow. That was your worst performer, down 5.25%. That was earnings. They beat, but they guided in line. The CEO basically said in the conference call that happened yesterday that the buy cycle for their customers is just getting a little bit longer. They're a little concerned about the overall economy. And so 5% down on the day there for Cisco. And then Pfizer very near hitting new 2-month lows there. Pfizer selling off just a little bit. Not in the Dow necessarily, but Merck also a little bit extended, looking kind of extended there in the short term. Anyways, in the S&P 500, you got just a handful of them here. Equifax hitting new highs. Iron Mountain, ticker symbol IRM, not hitting new highs, but one of the stronger ones in the S&P. Applied Materials also, and Duke Energy. Duke Energy hitting new 52-week highs. All of those because of earnings beats. If you look on the downside of the S&P today, you got network appliances almost 10% down on the day, closing off its lows, but still down about 10%. CenturyLink losing 8.5%, and Kraft Heinz also losing almost 8%. That would be all earnings misses. So if you sort the S&P 500 by best performers and worst performers, the best performers all earnings beats, worst performers all earnings misses. Just kind of coincidence that that's how it happened today. We'll cover some of this here in just a moment, but let's go on to your sectors. Utilities hitting new highs. Very strong day for utilities, up another 1.1%. Utilities and REITs and consumer staples, right, all looking good today. That's defensive. Those are people that are playing defense, and these sectors have been really, really strong. Slight help today because of the bond market, but overall, this is just strong sectors. Why are people being defensive if the economy and the stock market are doing so well? You're finding it harder and harder to convince people to continue to take more and more risk, and you can see that by the performance of these different sectors here. If we go over to bonds here, you got a small downtick in bonds. Some interesting news out of the auction that came out today, lowest yield and everything. If you're interested in that, slight safety trade as well for those people that are still trying to play a little bit of defense from, maybe you don't believe the China numbers or whatever that happened yesterday. So bonds a little downtick there, yields lower. Oh, there you go. Okay. Semiconductors hitting new highs today, up 0.25% on the day. Yesterday, everything was driven by Micron. Today, Micron was just slightly higher on the day. But today, the action was driven by Applied Materials. So Applied Materials, of course, on earnings, they did quite well. And AMD was also a standout there, 1.1%. Good job. I only pointed out because I know somebody mentioned it and they own it or something. And Lam Research. This is one of those that's just been on fire in the semiconductor space, so looking good. We mentioned consumer staples there. Really, if you look a little deeper, Walmart was one of the bigger movers in that category. Walmart makes up about 8%, and then that Procter & Gamble I mentioned a second ago makes up 15%. Put those two together, you got a recipe for a consumer staples category that's moving moving higher. I thought I'd point out regional stocks there trying to attempt to break this little downtrend line. If you're a technical trader, I like to try to help everybody. You know what I mean? Come on. I'm trying to help you. We can't. There we go. We got a little line there. So you got a downtrend here in the short term, right? Technical traders will look at this and be like, okay, got a little bit of an area here. We move above it. People would expect to see strength. You'll see some buying there. If you move below it, you expect to see people give up on the old regional banks. We'll leave that line there for you just to see what happens, see if we can try to teach you something new there. It really needs a bounce from here. It's down 2% on the year. If you look at the larger financials, XLF is one way to do that. Larger financials are basically up about 2%. So regional banks really need to play catch up there, and we'll see what happens. Tech stocks hit new 52-week highs today. What else is new? That's pretty much it. We'll look at gold up 0.5%. Again, a little defensive trade there. It's kind of interesting how if you keep looking around, you're seeing these people play defense. I just find that kind of interesting. Where are they running from? Tesla up $36 today. Here is an interesting one for you. So obviously Tesla's been a monster lately, trading at $800, basically right smack even there. They quietly tried to announce that they're going to do a $2 billion share offering, common stock, by the way, so public market. They announced that. Typically, shares take a little bit of a beating on that one. Tesla shares go up $36. Want to play a game? I will make a bet with you that it's not going to be $2 billion. It is going to be more than $2 billion. Anytime. Imagine that. If you're a company and you're like, oh, we're going to try to raise a little money, $2 billion, you think it's going to hurt you. It's a smart timing, by the way. Great job. Do it when stock price is high. But they say, okay, we're going to do $2 billion. You expect to take a bit of a hit. When you don't take a hit, you go back to the drawing board and you say, we meant $2.4 billion. Right? Of course, anybody would do that. So I bet you, Tesla, at the end of the day, is going to be more than $2 billion. Keep in mind, over the last, 15 to 18 days, the dollars changing hands on a daily basis exceeds $40 billion. So for them to sell $2 billion into action or a pool of $40 billion, it's not necessarily low, but it's not like every day $2 billion trades hands and one day they're going to make up all of it or however they do it. It's not happening yet, but not really that big of a deal, and I think people kind of initially were like, $2 billion, got $40 billion going on here, not too bad. We'll see how that happens, but I can't say the P word, promise, but I would be very, very not shocked if they go with 2.5, 2.6, something like that. They won't stretch it, I don't think, too much further than that, but we'll see what happens. So that's what the news is there. We go on over, let's see what we can do here. Go on over to Pepsi. Pepsi slightly higher today. They had earnings, came in as expected. Revenue was better than expected. Organic revenue up 4%, and they're expecting about 4% growth in 2020. That was basically as expected. I saw the CEO on Bloomberg or something, where he said there was no major concerns about China. They only get about 2% of their revenues from there anyway, so I wouldn't expect him to say they were panicking or anything. So the stock was a little bit higher. Alibaba did finish the day lower. It was kind of a volatile day for Alibaba. Earnings per share higher, revenue was higher, e-commerce and the cloud both did much better than expected. Everybody was happy with that. Monthly active users beat. Apparently revenue, they did do well. People were out there and are out there shopping, at least the comments that they made, instead of going outside, because I guess they can't. But was the narrowest beat in 2 years, and that's what everybody focused on today. Every analyst kept saying, it's a tight beat. Usually they beat by more. This is starting to be a consolidation of how the spread between expectations and the beat. Maybe that's the reason why the shares were higher. I just happen to notice that's what kept being brought up. 7.5% lower for Kraft Heinz on the day. Beat on earnings, beat on revenue. They raised their prices. I'm sorry, I think I said beat on revenue. They missed on revenue. So they raised their prices, but sales were lower. So, if you're going to raise your prices because you have so much in sales, that's one thing. But if you're going to raise your prices and you can't make it up in sales, it's just not really going to help there. They also decided they were going to push back their turnaround from March to May. Their turnaround plan, they're just going to delay it by a little bit. Nobody was happy with anything that they said today. That stock got hit pretty good. Aurora Cannabis actually gained a little bit on the day, lower than expected revenue overall, and the new CEO said, look, we expect to see continued problems. His actual comment was, we expect to see continued industry headwinds. I think he's right, right? So nonetheless, the stock held its own today, even with that comment there, so we'll see. Caterpillar was just a touch higher as well. This was a note out of Goldman Sachs. They did upgrade the stock, but Goldman Sachs said that the fundamentals of the stock are now improved, especially considering that the coronavirus thing doesn't seem like it's going to be a big deal. And I like the way they word some of their calls. They said that the risk to reward is favorable here. That's just sort of a kind of fancy way of saying where the stock price is at is a good deal. That's all they're saying. Not me, that's them. All right, let's take a look here. 66.3% of the S&P 500 is above the 50-day moving average. That's a slight downtick from yesterday, but overall we're staying in the 60s throughout the week here so far. You got 58 new 52-week highs today. You got 8 sectors again in that mix. A lot of the names today were the earnings that we talked about. They were the better performers in the S&P. Equifax, AMAT, Fidelity National was in there as well, if I didn't already mention that. Kind of a common staple in a lot of funds out there, so you might own that one. 4.3% higher on the day. Republic Services Group reported earnings, and that sucker is higher again. It's up now over 10% on the year. Excuse me. If you look, I don't know how far you can zoom in, but if you look, only 6 days of this entire year so far, which is not like a whole long time, 1.5 months here, only 6 days were down on the year. Only 6 down days. That's incredible to me. Just a powerhouse of a stock here. The largest losing day was 0.71%. So not even 1% down when it falls. That was on January 31st. We want to take a look right smack there where my cursor is. So anyways, earnings come out good for them. They did well and continue to do well. Humana hitting new 52-week highs as well. No news. This is purely because Bernie Sanders is currently leading in the polls, which doesn't bode well for him winning the White House. So it's not like their healthcare is cheering him on. They really don't want him to win, and for obvious reasons, he wants to make big changes. But so Humana, higher on the day, did hit 52-week highs today at 1.7% higher. All right, couple things here. We'll get out of the way. Oh, let's do after-hour earnings. NVIDIA, which did close today pretty much at its highs. NVIDIA, did we get that one? What's the deal, man? We might have to come back to that, my little data thing here. No, I got you. Hang in there. You're with me. NVIDIA up after hours 6.2%, 287.49. That's going to clearly be new highs. So NVIDIA, with their earnings, came out. Beat on earnings, beat on revenue. Coronavirus. Let's look for coronavirus, because that's probably a data center did really well. That's pretty cool. Coronavirus. Let's just search it. Coronavirus. There we go. They lowered their outlook by $100 million for the year thanks to coronavirus. That's not a big deal at all for them. So looks like all good. The only problem is when it opens up tomorrow, 287.50. Where's that going to be? Let's just play a game. You're at 270. I'll shrink the charts here. 287.50, way extended up here. So you might expect to see a little bit of profit taking early on, but other than that, looks good for NVIDIA. I know you want to see Roku. Let's take a look. Roku after hours. 4% higher, trading at 144.80. Let's call it 145. That's a little higher there. Not too bad. Beat on earnings, beat on revenue. Well, they lose money. They lost 1 cent less than expected, so that's technically a beat. 36.9 million active accounts versus 36 million expected. Good. Good earnings for them. Conference call should be going on now, so anything can change there. Mattel, 5% higher, trading at 15.15. That's going to be new highs. So Mattel, new highs on the year here, and also new highs in the short term. Beat on earnings. Not great, actually. There's got to be something else in there that I just can't grab real quick. But beat on earnings, missed on revenue. Overall sales looking pretty weak. Probably something about a restructuring plan, yada, yada. Revenue lags. Yeah, I'm not seeing it here off the Toy Story 4 boost. I don't know. We'll have to cover that one later. I don't want to take too much of your time. But the stock currently trading higher by 5% after hours, at least at the moment. That's what we got there. Oh, Pinterest. Look at Pinterest down after hours as well. Pinterest down 2.8%. 22.86 is where it's trading, continuing to pull back. That officially fills the gap from their earnings, which were pretty good. Looks like Facebook has launched, this is not new news, but maybe this is new news publicly or something. Facebook has an app that pretty much competes with it. It's called Hobby. But maybe they're rolling it out more or something. That's the news after hours. Facebook replicating Pinterest. I don't know that to be new news, but there you go. Wayfair, by the way, you see that? Down 14% on the day, cutting 500 jobs. A lot of restructuring there. It's too pricey. Been saying that since they went public. It's too pricey, man. I want to get excited. The pictures look great. I want to buy stuff. It just doesn't, I don't see how I can buy stuff. It's so pricey. And this is the coolest thing, by the way. This is just so cool. I don't know that this sounds appetizing to you guys. It doesn't sound appetizing to me. But Kellogg's, ticker symbol K, if you want to look it up, they're launching a new plant-based meat. And they have the best name ever for this in terms of marketing. I don't know if it has some sort of tasty appeal. It's called Incognito, right? I laughed when I saw that. I laughed out loud because, I mean, that's so clever. You could picture the commercials and everything. So they're launching a new plant-based product called Incognito. I'm not sure that that's maybe the most glamorous name, but it sure grabs your attention, I thought. Anyways, I'll take a chance here, try to answer your questions. Then I got to run, get ready for our class tonight with all the geeky stuff that we're putting together. Theodore, about the Amazon Jedi injunction there, is pretty silly. Yeah, I agree with you. Pretty silly, but I mean, at this point, it's probably personal. Maybe Ivanka Trump spilled something on Jeff Bezos' carpet while she was there at the party the other day, and he's upset. I don't know. Who knows at this point? It's kind of silly that they're still frustrated by that, but got enough money. You can do that sort of thing. Cool. Have you taken a look? We didn't look at LTC today. Nope. Obviously, it had a good day. REITs had a good day today. Everything in that category did pretty well. It's about the halfway mark, right? So it hit a high back around 53, a low around 43. So we're trying to get right in that middle of the road there. So you're going to have some people that think the glass is half empty, some people that see the glass is half full. So you expect to see a little struggle here. We'll see, but that's what you got. I love it. Incognito, like meat. That, not incognito, it was incognito. That's what I thought was so funny about it. Clever people out there marketing me. I think in a past life I had to play with marketing. I'd have been fired everywhere, but I would have at least given it a shot. Anyways, should first-time home buyers wait until election's over? San Francisco, well, I don't know much about the San Francisco housing market, so I won't pretend to be somebody there. I think at the end of the day, when you find, like anything else, if you find a deal on something, this bottle of wine, I thought it was a good deal, right? I think it was $12. I really won't pay much more than that for a bottle of wine, but at the end of the day, maybe they're struggling and I could have paid 10 for it. I don't know, I wanted a bottle of wine. So if you're ready financially to buy a house, you found the neighborhood, you can afford it, right? More than afford, which is saying a lot for San Francisco. I don't know about how volatile prices are in San Francisco, but at the end of the day, if you find a deal and it's something you want to do, as long as you're going to live there for more than 5 to 6 years, then not really too big of a deal. If you're thinking you're going to live in it for 2 years, I don't know that I would even buy the house. That's a little bit risky right there. So there's a lot of variables there. But at the end of the day, people that call me and they're like, I want to buy a house, but I feel like prices are so high. It just depends on what you're doing. Is this your forever home? If you're flipping it, that's risky, of course. But, you know, at the end of the day, you got to do what you got to do. Don't sit around and wait for the market. I have a good friend, which is interesting because I've only met him once. I've only met him once in person, but we're really, really good friends. Go back now 12 years. And since the financial collapse, he has not been in the market. He has not invested in anything. He's not bought anything. He just feels like there was going to be a big problem, and so he's missed out on all that. With a house, I just don't know. It's hard to it's hard to balance that. Would you rather have a lower interest rate and a higher price, or a lower price and a higher interest rate? There's a break even at there at some point, but if you can afford it, don't hold back. Go for it. Make something of this life. The days are counting down, right? You don't like the name? He doesn't like incognito. I mean, I get it. It's not a great name for a piece of food, I think, but maybe if the brand was incognito and then they had like more elegant names or something, but I said right on the thing, incognito. I love it. We went over ACB already. You guys know where I stand on that one. I see no reason to take a shot at buying that one in any significant way. I think it's like some of the oil stocks out there. You can let them bounce first. Let the tide change a little bit. Why do you got to buy it at 170? Why can't you buy it at 270, but you see that things are changing and everything's good? I just wouldn't pick the bottom there. Why is United Technologies pulling back? It's just in a nice calm uptrend. This is a normal sort of breathing in and out of a stock, right? You got a great uptrend here, breathes in a little bit, takes a little bit of a break, breathes in a little bit, takes a break. It took a nice breath in. It's just taking a little bit of a break. Right now, there's no super aggressive volume to the downside. There's not this constant wide range bar pressure to the downside. You're above the 50-day moving average. Every sort of metric that people look at for this stock, they're saying, okay, it's just pulling back. It's not really a fearful type pullback at the moment. I wouldn't worry about it unless you bought it at the highs, and that's more of a lesson about entries, but no, I wouldn't worry about it. I love it. When you have time, you'd like some of your input on that 5th point of our email. Okay. Hey man, if you want to schedule a call, it just allows you to pick the time. But if you're okay with it, I mean, we could do any time. But I can talk about this all day, man. Or maybe later, right? I'll see you later in the class, or if you want to, well, we'll just talk about it. All right, that's it for me here today. I got to get ready for later. I hope you enjoyed our little show today. Thanks for stopping by. It's always fun putting this together. You never know if the show's going to happen every day, and then right at the last second, you're like, okay, this is going to work. Enjoy. Thanks for watching, guys. Appreciate it, and we will see you again tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.